Good evening. This is the Elliott wave update for the S&P 500 for Thursday, March 10th, 2022. Not a whole lot to be adding to the current analysis. Yesterday's labeling remains in place where we finished up a minute wave 2 rally, and that was quite the rally yesterday, as we all witnessed, and I commented on yesterday. And we saw the market begin to decline today and actually reached a low at 4207. And it fell through the moving averages as I had suggested. If it did, it needed to begin to accelerate, and it did. So that part did happen. That part followed through. We did start to break support. We broke all the way down. We broke 618, we broke 50% support and got very close to 382. Now that would have been for this wave, the C wave, or the C wave of wave 2 going up, but we consider them to be support on the way back down. Now, what I am interpreting this as the beginning of a minute third wave. And then on top of that, we have a minor third wave that began up here. So we have minor 3 up at 4418.75. That's where the minor third wave began. Within that, we have minute wave 1. Now we have minute wave 2. So if this indeed is the beginning of 3, it would be counted as subminute wave 1 and subminute wave 2. Now, before I go further on that step, let's discuss the other side of the coin. And that would be that the market continues to pick up this rally and breaks back above the 200, the hourly 200, which sits at 42.75, and then breaks above 42.83, 42.98, so almost back up to 4,300, and starts to head up to 43.15, 43.35, and possibly 43.67 to 43.78. The only thing it cannot do as a wave 2, it can't break above 44.19. Now, this would be still a 3-wave structure labeled as ABC, but this would have to be ABC down. And I'd have to really go down low and figure it out, but it may be because we had that very strong rally right after our opening this morning. They rallied it up and then put in the decline. So this could very well be A, B, and then a C wave all the way down to that low, with this rally being the second part or the second ABC. So again, we're confronting one more time the possibility of a double ABC. Seems that the markets are continuing to do those during these periods of indecision about direction, indecision about, are we really going to go down, or are we really just going to continue to go up? That's kind of what's at hand. Again, the discussion does revolve around the 800-pound gorilla in the room, which, by the way, I believe has gone out and changed its outfit and put on a new fancy lipstick and had a makeover, because somehow the market is trying to convince investors and traders that, hey, we've already baked in a 1/4 point rise, and gee, the Fed won't really come in any stronger than that because, well, we've got this conflict going over, this war in the Ukraine, and so that's going to create a lot more problems if we really start to jack up our interest rates, and it's really going to hurt our economy, et cetera, et cetera. That is just a line, folks, because we don't know what the Fed is going to do. But I will tell you that today's CPI figure shows that inflation has gone up 0.4%. It now sits at 7.9%. So to believe that it's a bullish thing if the Fed only raises a 1/4 point, 25 basis points in mid-March at their meeting, that they take that as bullish, it's going to be the biggest opportunity to put on shorts, in my opinion. And the reason is because inflation is real. Inflation continues to attack us at the gas pump. Now, great that, when they're doing their inflation figures, they conveniently do not include food and energy, the two biggest things in all of us middle people, all of us investors, all of us in the world. We all have to buy food. There are shortages. Well, that war's going to just resolve itself. Really? That's not going to stop the shortage. There's still supply chain problems. The price of oil remains above $100 a barrel. It was all the way up at 130 yesterday, dropped back down. Now it rallied back up, continuing to rally right now as I speak, jumping higher. Now, whether they choose to buy this market or not, that's up to them. I still believe very strongly that the 800-pound gorilla is called inflation. And the only thing that's going to tame the inflation, to bring it under control, is a strong move by the Fed to pull up, put on their big boy pants, and not be afraid to shake the economy or the big banks or whomever. Because if we don't, the big banks aren't going to suffer, we will. So back to what the market can do. We need to leave room for, again, a continued rise within the configuration of the structure of a minute wave 2. So if we break higher, we break this hourly 200, we break above this light support, because it really should be up here at 42.98, start heading above 4,300. We have that resistance at 43.15, 43.35, and then the next zone is 43.67 at 43.79. What the market cannot do and still be within a wave 2 is to break above 44.19. If it does that, then in all honesty, we are still inside of a much larger pattern, which may end up being a large V wave. Now, I presented some of that yesterday. I will likely put a much clearer picture, maybe even redo the labeling and show it on Sunday. But we do have the possibility that this rally just picks up steam again and just starts heading up and really does start to head towards the all-time highs. And they can do that as a corrective wave and still have a massive corrective decline waiting to just tackle and wipe out everybody. Now, again, for tomorrow, we need to leave the room for additional upside. So we already got what'll happen if it starts to break. Downside, it needs to break back below this, where's my mouse? There it is, this cluster of the moving averages. We've got the 20, the 4, the 8, and the 50, all clustered right together. Now it's trying to travel above it as they're starting to buy up the Dow. They're starting to sort of move into the NASDAQ and the S&P. Who knows how long that'll last before we start to bring it lower. So if the market does continue to move lower, then I'm going to believe that this small wave 2 is complete. And again, this wave 2 itself, this little wave 2, not this one, but the smaller one, can get up to the 200, can get up to 42.83, just can't break 42.98. So if it breaks 42.98, then it's the larger 2 that's going to get moved up. So we do have room for a little bit of continued upside before we would expect the market to start to decline in a sub-minute third wave. So in other words, if this is wave 1 of 3, this is wave 2 of 3, next stop is 3 of 3. And we all know that story because I keep repeating it. And because they keep repeating that this third wave would be expected to start to break the support at 42.20, 42.15 or 16, 4200, 4180, 4148, 4138, and on down. Now, where could this end up? First thing I'm going to do, I'm going to remove that upside, and now we're going to put our downside in, and it would be the extensions that would show us on a minute third wave. So we're going to go from there, we put it in there, and then we put it there. Come on. And then we go up to this 1.8. They're not perfect, but they're good enough. So again, on the way down, 4192, 4159, 4126, 4101, 4079, and now we're broken below that. And then here, minute 3, yep, it could finish there. But that's where minute 3 would only equal minute 1. And that doesn't sit well with me. So I'd be looking for this next zone to kind of fit that bill and to bring this minute 3 down to 39.53, 39.12, don't do that. And then 38.47. So this zone down here, it's just as much alive as this. So the whole zone to complete the minute 3 is right here. 39.53 or 54, all the way down to 38.23. That's where I would think that this minute third completes. Then we still have the minor 3 in force. So we get a 1, 2, and a 3, then we get a wave 4, and then still a 5. And that's the one that I believe will be driving us down to like 3600. Then we'll be getting a minor wave 4. So I don't want to get too far ahead of us because a lot can happen between now and then, and the market might just decide that, hey, he doesn't know what he's talking about. But so for tomorrow, we have an upside scenario. We have our resistance coming up. We have a downside scenario. That is the one that I believe will be in play. And again, if it does, and it starts breaking these moving averages, starts breaking support, we should begin to see acceleration. Pretty much just not how they did this and did this and did part of this. It should just start to come down. Sellers will be stronger. The buyers could try to step in and they'll just be walked over and the market will go lower. That's my take, if indeed it's going to be this minute third wave down. So both sides, trade smart. Keep those moving averages in mind. Use them on your small time frames. That's the 1 minute, the 2 minute, the 5 minute. They work just as well there. And they provide the same action as if it was happening on the hourly. If it happens on the 5 minute, you're going to get the same type of a move. When they break, either to the upside or downside, it should give support to whatever the action is happening. If it's an upside move, it should give support that is going to go for the next moving average higher or to a resistance level above. And same for the downside. So that's where I'm going to stop for today. The volatility was not as bad as yesterday, but boy, there were moments of super strong volatility, both to the upside and downside, back to back. Back to back, we'd see a rush up at $10 in the NASDAQ, and then it would just slam it back down. And if you weren't quick enough to get out, if say you got long for the upside move and you couldn't get out, you ended up losing money on the trade. It was again a little bit of a difficult day, not impossible, but a little bit of a difficult day for trading. So I'm hoping that that all smooths itself out for tomorrow, but who knows? It's also Friday expiration. So what's in play right now? Amazon. Amazon flipped through over $120 or $150 of strikes all the way up as it announced its 20-for-1 stock split. So in any case, I would expect some movement. If we're heading down, you're going to have adjustments that are going to be made as these underlying stocks see the strike prices get broken on the way down. Okay. Next update for us will be on Sunday, the 13th.